Hi guys, Jason here, and today I want to talk to you guys about capital gains tax. It's one of those taxes as property investors we must understand, and more importantly we must understand how to minimise it or structure our purchasing in a way that it's effective when and if we sell. Hopefully we don't have to sell, but if we do, we're going to pay the least amount possible. And purchasing our properties, we need to think through the process of minimising taxes, whatever they might be: stamp duty, PAYG tax, land taxes, capital gains tax. So today we're going to talk about capital gains tax. And we've got 4 different places and spaces we need to understand taxes, capital gains tax, and how they work. Let's talk first about investment properties. Investment properties, for most of you watching this video, you're thinking about investing or you are already investing, and we need to understand when we purchase investment properties, how is capital gains tax applied? It's very simple. There is a 12-month window, shorter than 12 months or longer than 12 months. And so anything longer than 12 months, you get a capital gains tax discount. So if you made $100,000 as a gain and you owned the property for less than 12 months, you would pay tax on 100% of the gain as applied to your personal tax rate. So if you're on 33% tax rate, then that $100,000 gain, if you sold the property under 12 months, would be then applied to your tax bracket, and then you'd pay tax on that. Longer than 12 months, you get a discount, a 50% discount, so you would only pay $50K on the gain. So you would have $50K which would be tax-free, and then $50K which you would pay or apply to your PAYG income and pay tax on that proportion of property. So personal name, so in your personal name or a trust, that would apply the 50% capital gains tax deduction after owning that property for longer than 12 months. So investment properties, main thing, own it for longer than 12 months, you get a saving or a tax deduction or a capital gains tax reduction of 50% owning the property for after 12 months. So that's number 1, which is a good one. Okay. The best way never to pay ever capital gains tax on our investment properties is never sell. Okay? Never sell the properties, but for many of us, we're going to have to at some point if we want to reduce debt, or sometimes we're forced to, but we need to understand how that's going to be applied. The next one, our principal place of residence, the home that we live in, is something that's very advantageous for us as property investors, property owners. That one is capital gains tax free. So for many people, we might think, oh, should I invest in an investment property, or maybe I don't buy a home. At some point, it is very useful, if you do the numbers correctly, to have your owner-occupier house, your personal place of residence, because it's one of the only places that you can own an asset and you won't be charged any capital gains tax if you ever sell that property. Now that's only applicable if you own that in your personal name. Now you can't go and own your home, the home you live in a company or a trust or anything like that, and expect to get the capital gains tax deduction. That will not happen. So the place that you call home, personal place of residence, will be capital gains tax free if you own that in your personal name, and that's the one that you nominate. Now, there's a few little tips with that. You can rent your home out for up to 6 years and it still can be capital gains tax free. There's a couple of little tips and techniques about capital gains tax when it comes to our personal place of residence. But by and large, your home will be capital gains tax free. It's one of the only places we can have an asset that doesn't get any capital gains tax. But there are 2 other places as property investors that we can take advantage of, depending on your situation, to get some very good tax outcomes. One of them, if you're a small business owner, classically it might be dentist, it might be plumber, might be a mechanic, whatever, might be a bookkeeper. You can have what's called a small business capital gains tax concession. And so, well, what has that got to do with property, Jason? Well, let me tell you. If you have a small business, and that small business buys and owns a premises, an office, industrial shed, a workshop, whatever that might be. It owns some property. That property is considered part of the small business asset. And in small businesses, there is a $2 million, there's some other rules, but up to $2 million, there's some other things you've got to comply with, but there's a $2 million capital gains tax-free concession available for small business owners, which can include the property you own that you run your business out of. So if you own a workshop and you bought it for 200 grand and 15 years later you sell your business and the property, or you can just sell the property and you sold that for $1 million, that property would be capital gains tax-free. Capital gains tax-free. But for small business owners, it's a really important one to think about when we're thinking about our business and growing the asset of our business and having some value there. Okay? So that's a really good one. And the other one for people who are in retirement phase, so when they are retired, properties or any asset owned with a super are capital gains tax-free up to a threshold, $1.6 million per individual. So you can get capital gains tax-free down here in super, as well as income tax-free, okay, which is pretty good as well. So there you go, guys, 4 places we need to understand about capital gains tax and how do they apply to us as property investors, how to minimise those and how to plan our property investment future, how do we own them, when to own them, why, and whatever it might be, to end up keeping more money in your pocket because you're smarter and you've done it the right way to begin with rather than trying to fix it up later on. Alright guys, hopefully that was useful. If you want to know more about how to apply that in your real life situation as a property investor, I encourage you to get along to one of our workshops, our property investment nights held all around the country, and we can add a lot more value when it comes to these ideas and a heap more. And until we see you in person, take care, stay safe, and bye for now.